6:13, time now to welcome Mike Eppel to BT. Good morning, Mike, on this Tuesday morning. How you doing?
I'm doing well, thank you. How are you?
Good. And it's going to be a busy Tuesday morning for you. We have July inflation data coming out later on this morning. What can we expect? Last year, or last month rather, was over 8%. Will we see a repeat of that?
No, likely not. It's likely to drop to around 7.5%, maybe 7.7%. Still elevated, Tammy. Let's not get ahead of ourselves here that somehow miraculously prices or life has gotten any more affordable or less expensive. But the pace of price gains may have slowed down just a little bit in July from what is believed to be the June peak of 8.1%. What's happened is gas prices have dropped. They were at that record high for much of June, came down around 10% last month, so that's going to cool off the headline inflation rate. Have food prices dropped? Not really. We'll see if, in fact, there was any change in the grocery aisles or, has the cost of home affordability come down? No, mortgage rates and everything else has gone up, so I'm not expecting much of a move here, and analysts are cautioning. Let's not get ahead of ourselves here when we're talking about the inflation rate coming down, because, again, the Bank of Canada's target is 2 to 3%. And right now it's, north of 7% on the headline. The core rate, which takes out food and energy prices, is around 5.5%. So the Bank of Canada is going to keep raising interest rates. On September 7th, we're expecting a 50 basis point increase, and then in subsequent meetings to follow. So borrowing costs are going to keep going up, and we're going to continue to see this transition and pricing pressures building.
Affordability not coming down anytime soon, Mike.
No.
When we look at earnings, quarterly earnings for today, what's coming out later on today, Home Depot, we were talking about this yesterday, and whether or not it's going to show if people are scaling back on the home renovations.
Just reporting earnings, as a matter of fact, and the bottom line headlines from Home Depot indicates that no, they've seen an increase in sales year over year. Revenue up around $46 billion, which was up just over 6%. Same-store sales are up. The profitability's up. Now, again, the latest quarter was where we saw inflationary pressures building and interest rates climbing. So it might be this quarter, Tammy, where we really start to see people who were spending huge dollars at the Home Depot and its competitor Lowe's to renovate their homes. How are they paying for that? Home equity lines of credit. And that, borrowing against your home is not as affordable or inexpensive as it was when we were looking at, a 2%, if not less, 5-year mortgage rate. So there's going to be a shift here in the pace of home renovations, I'm guessing. But in the latest earnings report, at least, Home Depot's numbers are good. Walmart's going to report a little bit later on this morning. They've already warned that they have seen consumer trends shifting and people spending more on basics and less on discretionary spending at Walmart stores. And we'll get confirmation of that a little bit later on this morning.
Right. No more excess anymore at all when it comes to spending. No. Just get the basics and what you need.
Choosing. I think being more choosy into where you're spending your money.
Right. We'll head over to a new study. We know that the Ontario government has promised over the next 10 years to build 1.5 million homes in the province. Is that going to happen? A new study saying no.
Yeah, the expectation is that they're way off target for building homes in this province because of, well, two things, actually a few things. First of all, zoning laws, and maybe that's, again, this whole strong mayor policy that the Ford government is looking to bring in for Toronto and Ottawa to start to speed up the pace of home construction. The other issues, though, are rather the fact that, well, borrowing costs are going up. So the builders themselves, they might actually start to slow down because, again, if you don't have as many buyers coming into the market, well, you have demand for new homes, and the rental market has certainly shown this recently. And also, they figure that they're going to need at least a doubling of the number of people who can actually construct a home to hit that 1.5 million home price target or home construction target. So, I mean, there's so many factors against the rapid increase in home building in this province that it's going to be a real challenge to see. Getting people into the trades and all of that we've talked about, a lot of that, does that start to help ease up the pressures. Or does home building slow down just naturally, again, because of the shifts in the real estate market?
Right. And speaking of those shifts, we are seeing another decline when it comes to home sales, fifth straight month.
Yeah, that was the Canadian Real Estate Association saying that home prices and sales have dropped dramatically here. The July figures were indicating, for Toronto, a near 50% drop in home sales year over year. Prices are coming down, and this is, again, kind of goes with the individual city by city reports we've already seen. But what happened in February when the prices were at a peak? The Bank of Canada started raising interest rates, and that started to tip things over, and now sliding for 5 months in a row.
All right, Mike, thank you so much. We're out of time. Have a great rest of your Tuesday, and hopefully we'll get some more information from you when it comes to inflation numbers later.
Indeed, you will.
All right, thanks very much, Mike.